Hi everybody, I hope you can hear me. I do apologize for the late running of this webinar. Hoping you can hear me. Let's just... Okay, you should be able to hear me clearly. Can you just confirm with a quick chat message to say that you can hear me, and I will be able to then confirm and move forward. So if you just put a little bit of a chat message up on the chat window that you've got, and just to confirm you can hear me, and then I can move forward. Let's have a quick look. Yeah, okay. Bit of an echo. Might be your end, Gary. I actually can hear this reasonably okay, but I'll try and do this the best I can. I've done a couple of other webinars this morning and that's the first report I've had of an echo. I can try and move away a little bit from the laptop if that helps. But at least you can hear me and see me as well. So welcome to today's webinar. I do apologize for the late running. We had a little bit of technical difficulty on an earlier webinar and we're just trying to catch up on time. So in today's webinar, I'm going to spend a short time with you guys. I'm going to talk about two topics. One is to do with trading in general in Tekton, and one is to do with the power of what I call compounding, the compound effect. Now, the compound effect is something that I came across quite a few years ago, and is really something that is an eye-opener when you come to talk about the growth of something. So I'm going to talk about the compounding effect first of all, and then I'm going to show you a couple of things on Tekton which can reinforce the compound effect. And I'm going to share with you today a strategy that I've created that has a very good, strong return. And then when I add the webinar video recording to Tekton later, the forum, I will give you the code that you can use, and you can put this code in as well. If you're able to, I may be able to put the code in here as well at some point, so you can actually copy and paste it in yourself. So I'll just go over the import export function as well when it comes to doing that. So let me show you the compound effect that I've put together and give you an overview as to how compounding really can help you when it comes to trading and growing an account. So I'm hoping you can see the slides. I'm sure you can. We've got Tekton Algo Trading Simplified and the compound effect and how Tekton can help. So the first slide, Albert Einstein, as we all know who Albert Einstein was. Albert Einstein was a very famous gentleman who was very intelligent. I believe he won Nobel Prizes as well. But he famously once said that compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. Now, none of us like paying interest. None of us like paying interest on anything, and in different parts of the world you'll find that different people will pay different amounts of interest for different things. But interest is also something that we can earn, and compound interest talks about how you can earn it, but how you can also pay it if you don't understand it. So what I wanted to do today was just quickly go through with you how compound interest can benefit you, and how something like Tekton as an algorithmic trading product can help you with compound interest and remove that emotion away, so you're not constantly watching trades and leave things to run. Because when you leave things to run, not just do they become self-fulfilling, but with regards to the trading account, it becomes self-fulfilling with regards to the growth of it. So let's look at the next slide. So what is compounding interest? So compounding interest, if you were to take an amount of something, whether that's a cake, for example, if you was to take a cake and add 10% to a cake and then make that cake again, that cake would be 10% bigger than the previous one. So it's basically adding something to it so something's going to grow. Now, in this case, if you took an amount of money and added some to it, the amount of money would grow. And putting it simply, this is called simple interest. You are adding an amount of money to something else, or you're adding an amount of liquid to another amount of liquid, or whatever it is you're adding. Now, what are we talking about with regards to compound interest? Well, let's look at a trading account, okay? So we're going to take a typical trading account of, say, $5,000. $5,000 in a trading account, and we're going to grow it by 3% in a month. 3% in a month, that trading account would have increased by $150. Now that would result in the amount of money increasing to $5,150. It's very simple to follow, very simple to understand. It starts at 5,000 and you add 150 to it, which is 3%, and it becomes 5,150. Now the point I'm trying to make here is that if you did that and think ahead and worked out what would happen if you did that every month for 1 year, i.e. you did that 3% times 12, that would give you 36% increase on the starting amount. So in this case, it was a starting amount of money. It's increased by 36%, which means it would be $6,800. And in the grand scheme of things, guys, that's really fantastic, because to take something from $5,000 to $6,800 in one calendar year is pretty much very good. So that's simple to follow. Now, if we just look at the next slide, let's look at that compared to, say, for example, a bank. A bank would grow on average in the UK, and I'm talking about the UK. I know we've got people looking and watching from various parts of the world here. We've got Africa and Australia as well, believe it or not. Funny time in Australia, I think it's about 2 o'clock in the morning. So wherever you are in the world, if you put your money into a bank or into a institution or into a savings investment or whatever it was, you would get a different amount of money depending on where you were in the world. So let's say typically you'd be looking to grow it by 1% in a year. So your $5,000 in a bank account and grow it by 1% in a year, it would increase by $50. So your 5,000 becomes 5,050. That's simple to follow and understand too. And in comparison to trading, as you can see, it's not that good. Because if bank is 1 year, 5,050, compared to trading is $6,800. So in this case, trading wins every time. I've even narrowed this down to just 0.5% in a month. On average, if you added the 0.5% together for 12 months, that's still a 6% increase in a year, compared to banks in the UK gives you 1. Now, I know property investment can give you a lot more, and I know that some countries, and some of the countries some of you guys are watching from, will give you a lot more. I know for in India, it's 9 to 10% return on money on savings. So 0.5% a month wouldn't really cut much about it. But the reality is you should be doing a lot more than 0.5% in a month as a trader on average. So we're looking at 3% per month. It equates to 36% in a year. So let's move on and let's look at the compound effect. So the compound effect, if we look at this chart here, on the right hand side, you can see your starting capital, the 5,000, and you can see here 3% per month. And the 3% per month is added to the account every month. And after 1 year, as you can see here, we don't have 6,800, we have 7,128. So we have an additional amount of money that is there at the end of the year, but is added throughout the 12 months. And subsequently, after 2, 3, 4, 5 years, it would grow even further because of what we call compound interest. So it's very simple. Your money is growing each month and your growth is growing too. And that is what compound interest is all about. So let me show you how that really works on a month by month basis. So as you can see here, we have a chart for the first 12 months, your $5,000 to start with, your monthly return after the 3 months, and you have also got the portfolio value after 1 year. Then that transfers over to month 2. And after month 2, you can see you do the same percentage return, but the return is actually a little bit more in that month. So this then increases the portfolio value, and so on and so on and so on. So you have that compound interest growing. In some of the workshops I've been doing over the last few months before coronavirus kicked in, I was talking to some people in Johannesburg in a trading course I was running, and one of the guys in the course put his hand up and said, "Mark, I've got a question." And I showed him this exercise, and he said to me, "Mark, are you telling me that trading is the only job that I can do where I can get a pay rise every month?" And when you think about it, it is the case. You can actually sit there and achieve the same return percentage wise in a month, but month on month on month, you can actually get to a stage where you're actually earning considerably more each month, or a little bit more each month as you go forward, for doing the same amount of work. Now, of course, with Tekton, you're not really doing the work. You're just going to let it run automatically. Now, obviously, these numbers are looking small, but if you let it grow for a longer period, $5,000 at 3% per month will actually compound up to almost $30,000. And that's moving forward over a 5-year period. And again, that's really, really good when you compare it to other investments out there and other savings plans out there. So if we look at the slide, it says here, you'd receive an extra $328 in your first year on top of your 5,000. On top of that, you'd get another $328 in compound interest compared to what it would have been if it was added 3%, 3%. And that would have been if you'd have taken money out of it, okay, or started playing around with it. So the useful thing and the useful tool and tip here is that let the thing run, let your trading account run, and let the thing breathe and let it appreciate. You do get the benefit from letting it breathe because you've got that compound interest. And guys, look, that's another 6%. That's another 6% on the money that you invested in compound interest alone. So $328 on $5,000 is 6% in a year. And again, you're looking at 6% in a year just in compound interest, not the overall interest. So you can see the real benefits of doing this and leaving it in. And I was gobsmacked when I first saw this. Now, of course, if you want to get to a higher percentage, which you can, then we can teach new things that allow you to have much higher reward to risks and looking at strategies that give much stronger returns and that sort of thing. So other strategies, multiple strategies. Many Tekton users run 1 or 2 strategies. Some use 4, 5, or 6, depending on where you are, depending on the leverage available, and depending on various functions and factors. This is why one of the things we're doing is we're adding to the Tekton library of strategies all of the time. So you don't just have one running, you can have multiple strategies running. As long as you fall within the risk management and you fall within the margin and leverage criteria where you are, you'll be fine. We ran one strategy at the back end of last year between August and I think it was between August and the end of October. So a 3-month window. And in that 3-month window, the one strategy on one currency pair made 400 odd trades, all through Tekton. So 400 plus trades, but it returned an average of just over 3% in that period each month. So an overall growth, as it was left, of 3 times 3 of 9, but with compounding, it added up to over 10 or 11% growth in that one period. And that's just one strategy. That's one strategy running on its own. And if you're running something concurrently to that, then you really have got something that's going to give you even compounding in a much stronger way. So one of the things that's going to be launched very soon is a workshop on our Tekton forum as well, called Trading for Beginners. And in there's going to be all sorts of things for people to refresh on, and all sorts of ways in which you can learn about trading if you are reasonably new to it. If you're somebody who's quite new to it, then there's the Tekton Algo Trader course, which shows you how to get more out of Tekton as an existing trader. Now, I'm going to be doing more stuff moving forward with regards to advanced training, advanced programs. I'm going to be doing those moving forward. I can do private stuff if you need to, if you want to do some one-on-one stuff with me. I've done some one-on-one coaching this morning with some of my clients in South Africa. So if you want to do something like that to get a higher return in a month and run multiple systems, but still looking at controlling the risk, and at the end of the day, this is what this is all about: keeping the risk low, but keeping the returns going forward. I'm more than happy to help you. Keep in touch, and then we can help you via the forum on that. So we've got to a stage right now where we have the period over a year has given us an extra $328 on a $5,000 account on top of what it made in growth anyway. So let's try for ourselves here and see how compound growth really works. If we look at this here, this is a penny. Okay, now I'd like this to have been animated. It's not animated, so it just gives us an idea to really explain and demonstrate how compounding really works. So for example, here, if we look at day 1, we have a penny. Day 2, the penny doubles. So every time we move over a calendar day, a 24-hour period, we get an extra penny. Wow, not a lot, but effectively it's doubled. So if somebody says to you, there's a pound, and you already had a pound, that's all you had, you've just doubled your money. But if you've got £10,000 and someone gives you a pound, it's a small amount. We are doubling. So here we have 1 penny day 1, day 2, 2 pennies, 4p, and so on and so on. So after day 7 of 1 week, our 1p or 1 penny is now 64 pennies. So it's actually grown exponentially in a very strong way. And so on and so on and so on and so on up to day 15. Now, day 15, as you can see, our 1 penny, just over 2 weeks later, has grown to £163.84. Transfer that over to day 16. Remember, this is each day. It doubles again each day. And look at the rate after 3 weeks. So after 3 weeks, doubling just each day, you've now gone from 1 penny to over £10,000. This is a real great example of how compounding really, really works. Now, if we then go forward to the end of the 4th week, we've still got a couple of days, but the 4th week, that $10,000, and this is where it gets really silly, has got to 28 days, £1.3 million, and so on and so on. Now, if you ask somebody, and this is a little quiz you can play, guys, if you're in lockdown, you can ask your friends and family, if you had a penny and it doubled every day for 30 days, how much would you have at the end of the 30 days? And I would hazard a guess, if somebody is not in banking or somebody hasn't watched this video, this webinar today, not many people will give you the answer. And I think that's a good little thing for you guys to take away and ask that. Okay, I did this at the golf club where I'm a captain and member of, and I said to the guys, if I gave you £1 on the first tee and I doubled it every hole until we got back to the clubhouse, how much would you have? And I was getting things like £36, £55, and all sorts of weird and wonderful things. And the actual answer is a considerably lot more than £54. You work it out for yourself, guys. 18, doubling it out after 18, £1. The actual figure is 131,000. In fact, it's actually more than that. So the real way that compounding really benefits you is letting things grow, letting things run, and not getting involved, not tweaking them, not fiddling with them, but just making sure you set it up right and just monitoring as you go. So, how can compounding work for me? Well, not really for me, but for you. What does your bank pay you to keep your money with them? Exactly. They keep you next to nothing in the UK and across Europe. And I am aware, yes, in India and other places, you do get a fair amount of interest, more than what we do in the UK and Europe. In Europe, it's negative right now. In the UK, we're very low on interest rates. So the best way to allow the compounding to happen is to let a trading account grow with no involvement from the trader, no playing around with stopping and starting, but finding a consistent method of growing money regularly. Trading will Tekton will precisely do that. So let me look at some things that you can get yourself involved with. I'm going to share my screen with you, and I'm going to show you some things that I've been doing to show you some results we've been getting. But before I do, does anybody have any questions on what we've gone through so far? I'm happy to go through anything to do with compounding if you want me to. Just pause for a moment while we get some questions coming through. No, good. Okay. Anybody else? Okay, good. Okay, so let me close this down, and I'm going to share my screen. I'm going to share my screen with you. And you should all be able to see, and I'd like you to confirm my screen here, my Tekton screen here. Can you all see that? If I can just get, I've got somebody watching here as well. So if I can get a quick confirmation that that can be seen. Fantastic. Okay, so this is a Tekton Algo trading account. The first one I wanted to draw your attention to is this particular strategy here. This is an EMA cross fast. Now, I've called it EMA crossed fast is for a very simple reason. Okay, I'm just going to go in and edit it. So once you've created a strategy, you can then go back in and edit it, providing it's not running. So if you notice on my version of Tekton here, I've got all of this particular account that I'm running. It's quite a new one. I've only had it for a few days. I'm trying some new things. And we have a trading account with all of them in drafts. So all of the strategies are running as drafts. So this is the one I want you to look at first of all, okay? EMA cross fast. We click edit. If we were running this, we would only be able to view it, okay? But because it's in draft mode only and hasn't been set to run live, we can edit it. We click edit, and here we have the algorithm. Now I want to just show you this algorithm because this, and you might need to just maybe zoom in a bit, or maybe if I can zoom in, I might be able to zoom in myself. Yep, I can. So here you can see we have an open buy and we have an open sell. So the open buy is in essence a moving average cross. But what I have done here is I have shown you that the moving average cross using a exponential moving average and a simple moving average. So let me just explain to you by looking at the charts what that means for you. So I just need to go back to my share screen and share this with you and share the other screen with you. Okay, so you should now be able to see my Tekton Algo screen in a moment. Not that one. I want this one here. 11123861. Just bear with me. Okay, so let me just get you a screen up here that we can see. So we have a chart here, okay? So in order to put a moving average on here, we go to our FX indicator window here, and we find EMA. Okay, so I'm going to put on here the EMA we've got in our trading strategy, which is 21. Okay, 21. I'm going to leave that red. Let me make that a little bit bolder. If you want to make it bolder, just double click it and click OK. So the other moving average was a 150 period. So it's measuring the last 150 bars, but it's an SMA. Now the difference being is that an SMA is a simple moving average weighted over all of the data, all of the period. So if we put 150 on here, make that white. Actually, I'll make that yellow because I want to make the other one white in a moment. Make it thicker. So this, in essence, is the moving average cross. When the 50, or the 21 period crosses above the 150, as you can see there, and it's a buying trade. And you can see it's a good buying trade. It moved nicely up, it crossed, and you had some good mileage in that. But if we show you using an EMA, so I'm going to put on here a 150 EMA, which is not what I'm using on the strategy. I'm going to color that white. Okay, see how the 21 moving average, which is the red one, crosses later. It crosses later. So it's crossed here as opposed to here. Now, as a trader, trading is all about getting into the market before everybody else and getting out before everybody else. So in this instance, the strategy has been created using a fast moving average crossing a slightly longer weighted moving average, but no, it's using a simple moving average. So you're getting in early as opposed to late. So what we're doing here is we're giving us a bit more leg room to get in, and we're enabling ourselves to get into this trade a lot sooner than we normally would. And we'd probably, if we go back and look at a few of these, we can see that there's a big difference between the two moving averages. In some cases, it's quite a bit. Let me just put this onto Eurodollar to show you exactly how many pips difference between the two moving averages. Okay, so there's a difference of, let's have a look. Let's get me a crosshair. So you get the crosshair here, which will allow you to look at that. 888 and 875. There's a 13 pip difference in some cases between here, and in other cases here, for example, it's as much as 8885 and 8857. 28 pip difference between the two moving averages using an SMA and an EMA. So it's giving you the ability to get into a trade much earlier by using when an EMA crosses an SMA. And again, you know, I'm going to go back to look at showing you the results we had here. So this particular one is running on Eurodollar. It's running on a 15-minute time frame. We've got the CFD size at 1.22. CFD size for testing is irrelevant. We've got a 29 pip stop loss and we've got a 79 pip target. So these again can be adjusted. You can adjust these to anything you want. But what I'm going to do is quickly give you a run over with the back test of this to show you exactly how it works and how it actually the results come in. So we're going to click run test. I'm going to click it over all data, click run test, and let's see what comes in. I've already tested this, but I wanted to show you in real time and show you how successful this particular trading strategy is. And then when you compare it to the trading strategy of the using an EMA on both moving averages, there is a big difference. You remember, it can be as much as a 20 pip difference on your trading result. And that is actually per trade. So as you can see, you know, this is back testing, and those of you that have actually done back testing before, you're using Tekton compared to other back testing engines. You can see here that this is actually already done 5 months of back testing. The strategy is running at more than just over 3.5 to 1 reward to risk. So if you've got losing trades and winning trades, when you look at the comparison between the two, we've got a much higher reward but a lower risk. And this is where compounding really is going to help you. And this is where it's going to really help you for your compounding of your accounts as well. So we're up to just under 8 months, and we've already got 1,200 pips banked on the back test. And it's showing you that we've got a good, healthy growth here. Now, again, playing devil's advocate here, if you were trading manually here, and you were trading manually along here, you probably would have closed this, stopped this, and moved on to something else. But what you've actually got here is you've actually got something that you've let run, and that's where Tekton really comes into its own, by letting things run, but letting things run in a way where you don't have to get involved. And if you are very risk averse, like some people are, in fact, we have somebody in our business that's quite risk averse, who's a trader, and Tekton really helps them because they can actually put on there some sort of risk parameters to prevent them from losing what they feel comfortable in losing if they do get a strategy that's not quite performing well as others. And that is this area here, which I'll just quickly show you, which is this area, the strategy drawdown. So this particular strategy has been created with a 500 pip drawdown. And that means that if the strategy during testing or the strategy during trading drops below 5,000 pips, 500 pips of loss, it will stop testing or stop trading. So this, as you can see, hasn't gone anywhere near 500 pips of drawdown, hasn't gone anywhere near it, but it's actually gone down only probably about 50 or so, but the rest of it's all been nice profit and nice growth. And again, you have got times here where on average, some months it's probably pulled back a little bit, but the consensus is that the profit and loss curve is growing. The thing is growing nicely moving forward. It's got some good good positive upward movements, and nothing, as you know, moves in a direct line. It always moves in phase ones and phase twos. And if you want to know what phase ones and phase twos are in trading, then the trading workshop and trading course on our Tekton forum that's going to be there in the next few days or so will be able to explain all of that and a lot more. So as you can see, we're up to 2,300, almost 2,500 or 2,400 pips of profit on just that one system. And this one is really a good positive return. Just because we've used a EMA crossing an SMA, what we give ourselves that extra edge up front and getting in just a little bit earlier, because the fast moving average has crossed a sort of a more slower oil tanker type moving average, a bit like a speedboat winding in and out of an oil tanker. So we're coming almost to the end now. We're almost completed the back test. In fact, we have completed the back test, and the result for that was 2,721 pips of profit. Now, that's a really good return. That is a really good return. At 1.22 CFDs, you'll be looking to trade that potentially around about 15. That's probably around about 15 $15 or 15 euros. In fact, we can work that out actually. Let me show you on here how we can work that out. So on euro dollar, let me find euro dollar and go to my window here. If we go here, we can actually put in here 1.22 in this box here, which is our deal ticket, and it will tell us that's a pip value of 11 euros 29. Okay, 11 euros 29 per pip. So running that particular euro dollar trade, which is here on euro dollar here, would equate to that amount in euros per pip, 11.29 euros. So if you work the rest of it out yourself, 2,721. So let me just do that on my calculator here in the office. Calculator. 2,721 times 11.29 £11.39. That would give you 30,000 euro profit over that time period. And had you been trading, and let's say you started with a $10,000 or 10,000 euro account, you've just then tripled that in 3 years, which is fantastic. And that is the power of compounding, and that is the power of Tekton, and that is the power using just one strategy. Just one strategy, one new strategy there, which I'm going to put the code up for you so that you can adopt that strategy yourself. And then once you've got the code, you can then import it into your version of Tekton, and you can then edit it, duplicate it, and you can then change the parameters on it yourself to see if you can get it even faster. Now, the other one I wanted to share with you is one that we've shared on our forum before, which is this one here. And this one here is Euro Yen, Bollinger Band, and Stochastic. I've got somebody here that's, so if you do have any questions, guys, although I can't see your questions, I do have somebody here that's moderating the questions for me. So if there are any questions that you have, please feel free to ask them, and I'm sure I'll get notified and I can just jump out of this and back in to share with them with you. So if we look here, let's actually edit this. We've got another one here, which is the Bollinger Band and Stochastic. So we've got a dual instrument here. So when you're building algorithms, you can use two indicators, if you like. So you can use the Bollinger Bands and in conjunction with something else. And what we've done on this one is we've used Bollinger Bands and the settings 203. Those of you that are out there are traders, you'll know that the standard setting is 20, but we've used 200. And Stochastic, which is 30, 10, and 10. Again, we've adjusted the settings on these to suit the new strategy. Now, I'm not going to backtest this in front of you, and the reason why I don't want to backtest this in front of you is because it does take a little bit longer to backtest. Usually it takes no longer than about 1.5 minutes, 2 minutes, as you've seen. But when you actually have dual indicators involved and a close buy and a close sell, notice we have a close buy and a close sell here. This means that we have a condition to open it and a condition to close it, as well as our stop loss, whichever one is hit first. So in this instance, if we open a buy, it will either close the buy at this, or if one of these are hit, then it does take longer to backtest. And I don't want to waste your time sitting there backtesting something, draining time out of stuff when you can be asking questions, or I can be teaching you something. So I'm going to show you some of the results. So we can look at our history of all tests here. And again, I'm going to share this code with you as well. When we do the when we publish the recorded webinar, I'll publish the code for you for both of these strategies, this one and the one I've given before. But if we click history of all tests, it shows us the results we've been getting. And on Euro Yen here, this was the results we got on Euro Yen. This is the trade sizing. Again, this is the algorithm. And most importantly, guys, this is the profit and loss chart. So as you can see, very strong over the time period it was testing. And it took 4,979 pips of profit in that time. Okay. Now, as you can see, it was consistent growth, apart from a few little pullbacks, consistent growth. Constant growth. Now, again, if you really are somebody who wants to drill it down to the infinite detail, click your trades button and you can see every single trade that was taken. So as you can see, we've got our stop loss kicked in here, but here we've got this close buy or close sell function kicking in. So we've got all of our trades listed for the whole duration. So you can go back and have a good look at the trades that it would have taken. But the overall result, as you can see, was 4,979 pips of profit during that period. Now, as I did before, let me show you how much that means in monetary value. 1.17 CFD on Euro Yen. So let's go back here, close our Euro dollar ticket, and I'll show you how you can do this, how you can work out what your price per pip is using XStation. We will have a calculator built into Tekton at some point, plus lots of other features to do with risk management, which I know I've spoke to some of you individually about. So we go Euro Yen in here. this area here, click, and then just double click Euro Yen there. And that will open up this deal ticket, okay? So we put the volume in here, which is 1.17, and that's 10 euros 21 per pip. So again, if we put our 10 euros in a calculator and multiply it by our 4,900, so 4,979.10 multiplied by our £10.21, that would have given us a 50,000 euro profit, or return I should say, over that time period. Now, had you run both of those together over the last 2 or 3 years, then you know now you've got even more compounding and growth on your account. Now, I'm not saying to you every strategy makes money like that. I'm not saying every currency pair makes money like that. Let me show you what I mean by that. So let's, for example, go back and look at the Euro Yen one we looked at just now. Let's look at the EMA cross one we looked at. Okay, we've got other history of all tests here, and we've tested it on other pairs. And as you can see, 2,721, but on some of the other pairs, it actually doesn't make money. So what a wonderful thing to have is the ability to test the strategy you've got, but use it on other pairs and test it before you realize it doesn't work by losing money. It saves you so much time, even if you just set it to run on a demo. You know it's going to take you time to get these results together. So having the back test is so powerful. Now, let's look at the one that we've just looked at here, the Euro Yen trade and history of all tests. Now, as you can see, it works on Euro Yen. There's our result. But it also works on Dollar Yen and Dollar Swiss. Obviously, Dollar Swiss not so well, but still a 500 pip profit over the period. That's still going to be around about $500, $600 over the period. And on Dollar Yen, 199.99. So 2,000 pips of profit again over the time period for that particular strategy. So this particular strategy, the Bollinger Band and stochastic one, which I'm going to share the codes with you, is really a good strategy to have. I've tested it on about 6 or 7 pairs. I'm going to give you the codes, and I get yourselves to change the parameters, move the stop loss, move the parameters around until you can get them to where you want to be. We want you to be able to become proficient at using Tekton, because you never know what strategies can be created. So in order to get codes, and the very simple thing is that I'm going to show you how to create the code. So if you have a strategy you want to share with somebody, you simply go to the export function on the strategy you're looking at, export, and this will give you the code for that strategy. You simply copy it and then paste that into a Word document, into an email, and send it to somebody you want to give it to. Or you can import a strategy code here. So you can import the code that you've previously been sent, or I would have posted on the forum, to give you the ability for you to then import that strategy in. So all of the codes for both of these strategies I will put on the forum for you once we upload this webinar to our Tekton forum. Okay, that's my word for you. So that's why I said to you, get an account sorted out. If you haven't yet got one, you need to get one quickly so you can actually get these codes into your version of Tekton and move forward. So that's really what I wanted to share with you today. A couple of, one strategy that we've been running for a while that's actually been really we've been sort of flexibilizing it a little bit and just trying it on other currency pairs, but also the EMA cross, which has used the EMA and the SMA, and it's really sort of giving you the impetus where you can get in a lot early. And so, I wanted to give you best of all sort of 3 worlds there: compounding, existing strategy, but how you can flexibilize it, and also a new one, which is giving you some impetus to get in quickly. So I believe we've got 1 or 2 questions. So let me just get out of here and back into my here. Okay, great. Okay, so let's have a look. So let's have a look. What questions have we got? Okay, if we set a trade with Tekton at 3% risk of capital, will it continue to trade at 3% of the total account? So if I don't take any profit out, it will compound the profit me and take it, treat it. Okay, Gary, that's a great question. So at this moment in time, the best way to start your strategy off, and it all depends how many you're going to run moving forward. And I'll happily jump on a call with you, mate, if you want me to, or we can do a quick Skype call to go through this one-on-one if you prefer. So it's then relevant to your own account, because sometimes it's not really what you want to share on a public forum like this. But in essence, at the moment, when you start off a strategy using Tekton, you put the fixed amount or the amount of CFD in, which you would work out from a risk management calculation, and that would stay at that amount throughout. So as your account grows, your risk management will be less and less, or if your account dropped, it will be more and more. So that will change moving forward, where we're looking to try and make that dynamic. But what I say to people is, if you're running 3 strategies or 4 strategies or 5 strategies, then the risk that you'll be looking to place should be divided by those 5 equally. I wouldn't necessarily risk 3% on one strategy. Rarely do I ever risk 3% of my capital on any one trade. In fact, the risk management when I actually teach, and I do a lot of teaching people as a beginner, I suggest at the beginning people don't risk more than, say, half to 1% of their capital on a beginning, so they've got themselves some room to maneuver moving forward. But what it will do is it will calculate the CFD size, the volume size, based on the risk management that you calculate, and it will keep it like that moving forward. So that's where the strategy drawdown comes in. I know it doesn't really it's not dynamically managed, if that makes sense, but it's something we are looking to bring into the equation as we go forward. I mean, we've been working on Tekton for 3 years to get it to where it is now. This is our phase 1, and we've got lots more stuff coming. We've added more instruments, we've added more indicators, and while I've got you guys online, I want to say to you is, if there's anything you would like to see in Tekton, such as this, Gary, and I know we spoke online about this a few days ago. We will look at bringing that in wherever we can and whenever we can. We're at the moment we're in sort of development mode for the next phase of launch. We've added loads of instruments, we've added loads of indicators. So all the indicators that we're adding bit by bit that you can see on X Station. So what the ones you see on X Station, the charting, you'll see those added. We've had other instruments. So now wherever you are in the world, depending on the broker you use, we've got indices, we've got Forex, we've got some commodities, and some brokers will also allow commodities in time as well, which we're trying to get on board for everybody if we can. That's something we're going to try and work on moving forward across the world. So to answer your question, mate, in a long-winded way, if you set a trade with Tekton at 3% risk of capital on that one trade, on that one system, it won't continue to be 3% because the account's going to go up and down as the trades are placed. But if you left your money to grow and it grew by on average 3% per month, then you would achieve more than 36% in the year. You'd probably be looking at another good positive 6% or so more on top of that. The compounding is on the account growth, whereas the other one was on the actual trade sizing per trade. I hope that answers the question. But I say I'm happy to jump on a Skype call with you at some point. It'd be nice to have a chat with you and see if we can help you move forward. Are there any other questions, guys? I'm happy to take questions on anything. Anything to do with Tekton or trading or market sentiment. I'm going to look at running these webinars every week now. So we're going to run them from between 30 minutes to an hour, depending on what we cover. I think an hour and a half every week and a bit is really probably too infrequent and too long. So we're trying to do them short and sweet every week or so. So happily answer any questions on anything that you guys have. We've got one coming through here. I think. Oh, okay. Just a thank you. Great. Okay. Any other questions, guys? There's still quite a few of you watching. So if you're a beginner and you want to get started, great. We've got some stuff we can help you with. If you're an experienced trader and not quite sure how to get going, then really talk to us, guys. We have got the forum there for you. The forum is there for you to use. We've got lots of people on the forum. We're almost up to 100 members now. and there's lots of stuff that we can offer you and help you with to get you going. I think it's a really simple piece of system and a simple piece of kit, and we can take it from there. Now, if you want to jump on a one-to-one with me and you want to do an official one-to-one for about an hour, hour and a half, then you can do that. Looking at the Tekton forum, there's a one-to-one chat session on the courses section of Tekton. If you want a quick Skype chat for 10-15 minutes, no problem. Let me know. Contact me and I will happily share my Skype with you just to get some things started for you. Not a problem at all. But we've got lots of stuff we're doing, behind the scenes. I say I've been teaching and training, running courses for the last best part of 10 years now, and it's something I really enjoy doing and teaching. And if you want to, wherever you are in your trading journey, whether you're an experienced trader and want to get auto trading, Tekton's the product to use it with. If you're somebody who's brand new to trading and want to get going, get on board, jump on board to one of our courses. If you're somebody who's sort of sitting in the middle and not really deciding whether trading is something you want to be doing or not, you're just having a sort of kicking the tires around and having a think, jump on a Skype call with me. Happily have a chat with you. I'm not going to make you do anything you don't want to do. It's all about doing things comfortably. But believe me, trading can be a really good business to be in. It's fun, it's exciting, and with Tekton, it can really help you. I hope you've got value from this today, guys. I do apologize for the late running. I will be sending you a recording of this and putting a recording of this up on the forum over the next couple of days or so. But I thank you all for your patience. I thank you all for your your kind attention today, and I look forward. We'll send you out a link for the next webinar, hopefully within the next couple of hours or so. And if there's anything specifically you want me to cover on these events, they're not really for me to sit there and just talk about what I want to talk about. They're here for you. So if there's something you want me to cover on a webinar that you think would be useful for you, then just drop us a line or just put into the Tekton forum. Can you do a webinar on this, or can you do a webinar on that? Can you do a webinar on creating a strategy? Can you do a webinar on what you look for in a strategy? Happily to cover any of that anytime. So guys, have a great day, what's left of it. I hope the lockdown isn't getting you down too much. Hopefully we're coming to the end of this very soon. I thank you for wherever you're calling from, all over the world. Those of you in Australia, good night. Those of you in Europe and Africa and around more locally, good afternoon. Thanks for watching. Speak to you soon. Bye-bye for now. Hi everyone, so this video is something you're viewing after you've seen the webinar recording, the webinar of the compounding effect, and also where I shared some strategies with you. One of the strategies I shared with you, which was the Bollinger Band and stochastic strategy that we created back in March, has been running for a while, and I showed you some of the results over the last 3 years of that. And after the webinar yesterday, we had a trade triggered using this strategy. It is the one you can see running right now in front of you live. So we're now sitting on the 7th of May. It's around about 12:30, 12:40, something like that right now. And we are almost about to hit target, as you can see here. The current price is 115.01, target is 115.09, and our entry price was 114.49. So we've got a good 50 pips or so there banked already, and I'm expecting this to push up nicely to the target over the coming 10-15 minutes or maybe more. But as you can see, this has been created by Tekton using the interface and triggered on the broker account at 4 o'clock yesterday afternoon automatically after the webinar. So if you were quick and you copy and pasted the code I gave you in today, you can probably get 1 or 2 more trades in before the weekend, hopefully. So keep your eye out, get the code copied, get the code pasted into your Tekton version using the import function, and get this strategy running. Thanks for watching. Bye for now.